Hey everybody, hey, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. Right, it's the start of a new week. We're in the second half of January right now, and honestly, I talked about, keeping an eye on geopolitics during the weekend. I said that in the previous my previous Markets Talk sessions on Friday, especially. I said, look, if you want to do some sort of crazy stuff geopolitically, then you do it on a weekend. There we go, ladies and gentlemen. Boom, we have a new little conflict between a new old conflict between the EU and the US. Look, I'm going to talk about all that in session, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday. Monday, ladies and gentlemen, the 19th of January 2026. Yes. Welcome everybody. I hope you all had a fantastic weekend. I hope you're all feeling nice and refreshed to enter a new crazy week of economics, geopolitics, and well, just other little things actually. What bothers us on a daily basis. Anyway, ladies and gentlemen, welcome. I want to go through some charts with you, basically to see what's happening. And there are a few interesting things happening. I talked a lot about things on Friday, and I kind of warned you. I said, wait for the weekend. I mean, honestly, try not to keep any of the positions overnight. Look, before we jump into all that all these beautiful things, let me just go quickly through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Also, as I keep on saying, this live session is meant for interaction. So basically we can communicate. If you have any questions, feel free to drop them in the chat. And if you want to say hello, you can always drop that as well, just not to make me feel lonely here. But yeah, ladies and gentlemen, I hope you all had a wonderful weekend. So let's also just quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, I want to go through the economic calendar first, because before kind of jumping into other things, but very quickly, just to see what's happening this week and actually what has happened so far, because we got some Chinese data. And when I saw other news outlets this morning, some of them are like, oh my God, like GDP growth rate in China dropped from 4.8 to 4.5. It's like a big panic mode in a way or something. Like at least it kind of gave me this little feeling that it seems like, oh my God, it's such a big thing. Well, let's calm down a little bit, okay? Yes, it's a drop from 4.8 to 4.5, but I'm sorry, it's not a drop to like 2 or something like that. That would be a bit of a pain in the bottom, But growth rate Q on Q, it was an increase. Then there are a few down moments in terms of house price index, minus 2.7. So I'll get to that in a bit. Industrial production 5.2 seems to be okay. Retail sales, yes, on the lower side. Unemployment rate, okay, 5.1. So that's all okay. But now look, house prices and retail sales. Now, of course, the decline in those, it's not something that you would like to see. But again, these things happen. If I click on the chart here just to launch it, no, let me just do this very quickly. Yep. Oh, come on, honestly. Didn't save or something. Okay, then right. So basically, retail sales. Okay, you can see that those are sliding, still above zero. That's the most important thing. because there we had a period, but that was back in 2022. Don't get me wrong. I think there is a chance, there is a possibility to see the number actually dropping below zero, maybe even this year, if this tendency will continue. Because at the moment, it seems to be struggling to kind of find, some grip. The problem here, what we're seeing, why these retail sales and house price index year on year, let me just launch this chart as well. Why does this matter? Because, well, this is what relates to the consumer, and this is what the consumer is. This is kind of shows us how the consumer is worried, and the fact that the house prices are falling. This shows a little bit of a problem in demand for new housing, purchasing houses. It means that either the conditions are not the best, which maybe it's not really the conditions are not really welcomed by many of the many of the people, or maybe by the consumer. There we go. Or maybe just the fact that there is actually problems with incomes. Maybe people are losing jobs. Maybe there is job instability, and or prices have risen, and and you're really just kind of thinking, what, maybe it's not the time for me to purchase the house. So there we go. That's another indication. And we can see that this number has been on the lower side. It has fallen quite significantly since like 2017. This number has been declining and declining. So, however, if we look at this chart here, and if we do, let's say, provide, we do look at this from the technical analysis perspective, then we found good support. Now, if we do drop below the 6%, I think minus 6%, then I think that this is a worrying sign. But at the moment, it's stabilized, it pushes higher. Maybe actually it could travel back up, But again, we'll see how it plays out. For now, I think that the situation in China with the housing market, we know that it was not the best, and I think that it will stay like this for now. I think that people are kind of worried in terms of what's going to happen, especially with the geopolitics in terms of what's happening. I think all these reports coming out, and and people are not kind of stupid. They all understand that something is brewing, something is happening, and it's better maybe to sit a little bit on a pile of cash. However, on one hand, you're trying to protect yourself. On the other hand, well, you're not really doing your best for the economy. So again, it really depends on how you look at it. On one hand, you're saving some money, to protect yourself against something bad that's going to happen in the future. On the other hand, you're kind of not spending, and this way kind of creating those potentially bad times. It's always, like I said, it's always a stick with two ends. So, which one's the best way? I think there's always, as always in life, everything has to come with a balance. Anyway, coming back to the economic data. So, in terms of other economic data, so today, what else do we have? CPI final, final CPI numbers, core and headline. Yep's coming out from the Eurozone. We'll keep an eye on that one. Inflation rate year on year, 2.2%. We're expecting a little bit of a decline by 0.1%. Core year on year. Again, the same story, by 0.1% to the downside, the expectation. Canada, inflation numbers are coming out, so we'll keep an eye on that. At the moment, the expectation is for the headline number year on year to remain the same. The core, we don't have a forecast. Okay, we'll keep an eye on that. But certainly we know that inflation has stabilized a little bit, but certainly it's still above the BOC's target of 2%. Nevertheless, still manageable, still doable. So we'll see. Maybe we'll see a lower number right now. Going further on Tuesday, that's basically all the inflation numbers. All those inflation numbers were for today. Tuesday, unemployment numbers from the UK. We're expecting to see a drop by 0.1% in unemployment rate in UK. Now, average earnings, including bonus and excluding bonus. Now, this is excluding bonus, sorry, I don't have a number, but the including bonus, the average earnings are expected to decline a little bit. Well, it's an interesting moment here. Employment change. Now, this is something we'll also keep an eye on. Look, in general, overall, if the data is okay-ish, then we could see, the pound kind of strengthening a little bit. Maybe we'll see some, we could see some a push a little bit higher, but I think that still the market will stay dependent on what's going to happen, with the BOE, because if the numbers are actually, this is again a stick with two ends. This depends on how you're going to look at it. If the numbers come out better, maybe the bank will say, you know what, maybe we should actually maybe we should go and continue with those rate cuts. Now, the next meeting is going to happen, the next interest rate decision is going to happen on the 5th of February. So keep that, not next week, but the week after. So keep that in mind. At the moment, I don't see a forecast of, let's say, happening either to the upside or to the downside. I see a forecast for the same number to stay at 3.75. We'll see how that's going to happen. And then March number, I think that's when they're expecting to see a bit of a cut. Again, things change very rapidly. We have geopolitics involved. So again, you know, if suddenly there are some escalations between Europe and the US, then maybe, yeah, we'll see some action on the central bank side. I'll jump into, like I said, I'll jump into the US EU relations in a bit. Let me just go through the economic calendar very quickly. So yeah, going further, a bunch of data from the Eurozone and the EU. The Eurozone and Germany. ZEV economic sentiment numbers from both regions. Well, regions, kind of. The EU overall and Germany itself. Now, ADP employment change, the weekly one. Now, this is what I do like to look at this one. It seems like really there is like this moment right now where at least news outlets are trying to move away from ADP or giving it, you know, significance or something. But I actually will continue watching ADP because I think that this is one of the only agencies that kind of managed to stick, you know, and managed to give us something during the U.S. government shutdown. I think that we should not forget that because that skewed the Bureau of Labor and Statistics data a lot and kind of created a little bit of a mess. So ADP is kind of that, you know, haven of stability for now at least. Okay, going into Wednesday, United Kingdom inflation numbers. We're keeping an eye on that one. Expectations right now are on the higher side. Well, on the headline and the the core on the year-on-year side, by 0.1%. That's where we're expecting to see a number higher by 0.1%. Retail sales also coming out. Those are expected to be higher. Okay, interesting. Right, going further, PPIs, Canada's PPIs, well, those are expected to be a little bit on the lower side. Construction and spending and pending home sales, also something coming out from the US. But apart from that, nothing major. Now, Thursday, trade balance, Japanese trade balance. The expectation is for a higher number. Now, for this one, I do want to launch a chart. I do want to see what's happening here. I'll leave. This one here. Look at this. The trade balance has been kind of rising a little bit. And to be honest, I think it could be a little bit on the elevated side because of the cheaper yen that we saw during during December, during the beginning of January. So maybe this could contribute to the trade balance. Again, we'll see how it's going to play out. For now, the expectation is for a higher number. Let's see if it's going to be somewhere closer to this. If it is, then, okay, look, the situation with the Japanese yen, for now, I think that the yen is mainly reacting to either the BOJ, which we're waiting for, for its decision. And just to let you know, the decision is coming in on the 23rd, so this Friday. So keep your eyes on that. I'll jump into that in a bit. But yeah, the trade balance, keeping an eye on that one. And like I said, the BOJs, the Japanese yen still is, I think, subject more to what's happening with the BOJ and what's happening in the global market, because in general, because look, I mean, we had some escalations during the weekend between the EU and the US, and the Japanese yen kind of picked up its safe haven status a little bit, not much, but still. Anyway, going into Thursday further, job numbers from Australia. And still Australia seems to be kind of okayish. Yes, we're expecting a little bit of a tick up in the unemployment number, but 4.4 against some other major economies, I think this is quite good. By the way, the Davos meeting is still going on here. This is the reminder here on the economic calendar. So the Davos meeting is still on this whole week. All the elites are gathering there to play chess and decide on what's how they should cut the pie, which is called the world. Major economic shifts, developments. We'll see. I think maybe a few scandals should come out of there. Why not? To keep it interesting. So yeah, look. But in terms of coming back to the economic data, the PCE figures coming out from the US. Now, this is something that we will keep an eye on very closely. The current expectation for the PCE. Let me just show you what I'm talking about here. Why is it divided like this? GDP growth initially. Yep. Okay. So yeah. So they're coming out later on. Yeah. There we go. So the PC price index year on year. We're gonna get two numbers. I think one is October, one's November. Let me just quickly double check this week. Yes, I think that it's going to be October and November. There we go. Yes, October and November. Okay, look. For now, what can I say? The Fed will be watching these figures, right? However, is it gonna change something here? I really doubt that. I think yes, it's going to be important overall, like what's happening, just for us to kind of yeah, okay, it's lower, or let's say yes, okay, it's higher. But is it going to make any substantial change for the Fed? I really doubt that, because at the moment, I think that's it. Kind of with the attack that happened on Jerome Powell, I think that this is the moment where until he leaves, I don't think that something is going to happen. So even looking at the Fed Watch tool here, up until April, we're not really pricing in any cuts. Not to mention already the hikes. No. But the cut, no, we're not pricing any of that. Even if PCE drops, let's say by 0.2% here, or maybe let's say, or it even rises by 0.2%, nothing will happen. I think that, like I said, at this point, we're going to be more focused on the what's going to happen further with Jerome Powell and how this whole attack on him will unravel. Yeah, that's the thing that we're going to be probably monitoring even closer. But certainly we'll keep an eye on the PCE. I mean, if it somehow pops above 3% and stays above there, then yeah, then this is a little bit of an issue. However, the things that I just said about Powell, those things are going to be the more important ones. And going into Friday, ladies and gentlemen. So we'll kick off with Australia's S&P Global Composite and Manufacturing and Services PMIs, the estimates. Japan will deliver its inflation numbers, and then after that we'll get also the S&P Global Manufacturing Composite and Services PMIs, the estimates. But of course, the little thing that's going to happen after that is going to be the BOJ interest rate decision. Now, look, I mean, again, we're not expecting to see any action right now. I think that Sanaya Takaichi really probably asked, the BOJ not to kind of do anything right now. Maybe a little bit later, maybe going into, I don't know, maybe like spring, the first maybe months of spring, maybe then we'll see some action, because at the moment we know that the trajectory that the bank is holding, and so it's to the upside. So certainly it might help stabilize the Japanese yen, or maybe the Japanese yen will get stabilized, let's say, if the stock market does drift to the downside. And yeah, it's this is the interesting bit. Maybe naturally the Japanese yen will strengthen. Maybe you could delay the rate hikes by the BOJ. So because the whole point is to stabilize the Japanese yen, right? But if the Japanese yen is gaining on the maybe global concerns, then there we go. You didn't do anything, and then you have this stabilization moment. So again, this such a move. So dropping the stock market maybe could push the BOJ from hiking rates. Then I think the Western economies, I think, will. I'm not trying to be a conspiracy theorist here, but trying to understand which is better, to drop the stock market a little bit, or to allow the BOJ to go and hike rates so that it would be more expensive for the Japanese money to go into the Western economy and invest it in there. Yeah, probably the stock market would be the better option. Let's see. Anyway, coming back to the situation here in terms of other economic data sets here. So we have some estimates coming out from the HCOB, Manufacturing Composite and Services PMIs from Germany, Eurozone overall, and the S&P Global, same figures, estimate PMIs for in UK. So basically a lot of PMI numbers. Canada, retail sales coming out. Both preliminary and final. USA, again, S&P Global, again, estimates of PMI, composite manufacturing and services coming out. Michigan consumer confidence, and that's kind of it for this week. But overall, it is a busy one. We have also earnings coming out. Don't forget about those, because what's happening in the market is that we're getting big companies like I think 3M tomorrow. We're getting 3M tomorrow. Netflix tomorrow as well. Let me just double check, honestly. Netflix, 3M, US Bank Corp. On Wednesday, J&G, Charles Schwab, Kinder Morgan as well, Halliburton. There we go, another interesting company on Wednesday, delivering the one from the oil world. Thursday, GE Aerospace, P&G, Intel, Abbott Labs, CSX. There we go. Friday, I think that's SLB. I think it's Schlumberger, yeah. Used to be called Schlumberger, now it's SLB. Anyway, ladies and gentlemen, so again, busy week, and this is not to mention that today the market could be a little bit on the calmer side, despite the whole EU and US relationships right now. Look, I'm going to jump into the chart here. We know that the US market is closed today. They're celebrating MLK Day. Need to double check something here very quickly. Yes, so MLK, Martin Luther King. So they're celebrating their day today. They're going to be back tomorrow. But still, probably geopolitics will be the big driver, because again, we know that the US decided, and by the way, if you haven't heard news, US decided because US decided to impose the 10% tariff on some European nations, and let me just find those very quickly and read it out to you. That was Denmark, Norway, Sweden, France, Germany, United Kingdom, Netherlands, and Finland. So on these 8 countries, the US decided to put tariffs of 10%, which will start from February 1st of February. And then from March, if I'm not mistaken, let me just double check. I think it was 1st of June. From the 1st of June, it will go to 25%. So, and this is all because Trump really wants Greenland, and basically, it's in the EU doesn't want to give it back. I mean, in general, it should be kind of it's an interesting development. It's a really interesting moment, because it really tests the European Union as how they will deal with it, because it's a, let's face it, if you look at it just from the simplistic terms, you accuse one country for trying invading, let's say, not liking the government of another country and invading and taking land of that country, but then you don't accuse the other country which is trying to take land from you directly. So I'm sorry. Is the world has the world gone mad in terms of, like, are you like not seeing the, are you so hypocritical? So that's the interesting bit. So we'll see how it goes. Of course, it's a very difficult scenario right now, but certainly something to watch, something to consider. And the markets are reacting in a little bit of a negative way, but. I think that, yeah, the market will stabilize at some point, but again, if this continues to escalate, I think that this is where the stock market needs to be cautious a little bit. Maybe a little bit of a retracement back down could be possible. In general, to me right now, looks that somebody's really trying hard to drop the stock market, or force the stock market to drop. But the stock market kind of gets resilient again, comes back up, because again, most likely we will get some sort of a tech story right now, like, I don't know, AI related, something like that. Maybe NVIDIA will come out saying, oh, you know what, we did another deal here. And and this is how it normally happens. Like, you have your market correcting or something, and then suddenly you have a big deal coming out, big announcement. So yeah, like maybe at the moment the big announcement could come from Netflix. Maybe that one could do something with the stock market. Maybe if everything is good with the Warner Brothers purchase, maybe that could help the stock market to come back up again. Certainly, at the moment we're watching everything carefully. We're seeing a little bit of a retracement here on Nikkei. Let me just jump into that. So we're seeing a retracement in Nikkei after hitting a new all-time high last week, but still, look, am I getting very bearish? No, I mean, look at this. This is a beautiful thing here. It's coming closer to the upside support line drawn from the low of the 18th of December. So in a way, even if it does slide a little bit further south, then there is a chance for a drift, kind of a rebound from this upside line, and then push back up. So as long as this upside line is intact, I will continue targeting the upside. I will get more comfortable with the upside if we do pop above the 54,500 zone. But at this point, yeah, I'm cautiously bullish, but I'm not. Am I getting into it? No, because I want to see what's going to happen here. Because again, we might see a little bit of a further slide, further correction lower, and if this upside line holds, then okay, great. A rebound could be possible. So if we do break the upside line, I think, yeah, I'm going to start considering some lower levels. Shanghai Composite, there we go, pushing back up. Now, this is what I'm saying. It's not really like the data, yes, in many major outlets, news outlets, they say that, oh my God, data is very bad. It's not great, but it's not bad. That's the thing. So, and again, like I said, we'll keep an eye on the situation here with the Shanghai Composite. For now, it has a nice little healthy retracement. By the way, in terms of healthy retracement, let's see if there is some logic here with the Fibonacci's. There we go, 23.6. We did that last week. We violated it today. Maybe a drift back to the 38.2 could be nice here. I think it's quite doable. Around here, we could test the 20-day SMA within my Bollinger Bands, and then maybe a rebound and push back up. So let's see how that's going to happen. Dow Jones Industrial Average. Now look, I talked about this one from the technical side, and I said to you, we're currently seeing a nice little kind of range here, and this is what I talked last week, at the end of last week, because we went for an all-time high. Great, wonderful, but now we're struggling with that 49,633 territory. Let me just double check something here on another source very quickly. Just bear with me one moment. So we did push higher, but we're struggling. Okay, we're struggling to create a higher high. That's fine, but are we getting bearish here? No, of course not, because look, it could still, it could still push higher. It could go for a larger correction back down. That's fine, um, but I don't want to be, like I said, bearish yet. At the moment, looking at the cash index, we're currently trading at around 49,000 zone. So we're somewhere around here, basically, from what I can see. We still have a little bit of room to the downside. We could test this upside line. If we do stay above it, then yeah, a rebound could be possible. But in general, I think that the easier option would be just to wait for the clearance of one of the sides here of this box, of this little range here. Either wait for a push above the 49,633 or a drop below the 48,782 ish zone here. I'm talking about I'm looking at, the index here when it's open. Today, of course, is going to be closed, but the cash indices, the futures, are moving, and they're reacting to the situation in the market. I think it's going to be calm-ish. We already saw the declines in the futures. I think it's going to be calmish, but then going back into, tomorrow, somebody will try to revive the stock market. Maybe we'll see some deals coming through, but certainly, yes, Netflix is on the watch. Maybe earnings will help the stock market to go back up a little bit. Yep, we're going to be watching that very, very carefully. Earnings, like I said, we're getting Netflix and 3M, so keep that in mind. But yeah, for now, I'm being very careful here, cautiously bullish. Nevertheless, I need a confirmation breakthrough one of the sides here of this box. S&P 500, also nice, good little retracement. Look, on Friday it did kind of almost end flat, but with a little negative story to it. It remained above this upside line, but if we take a look at the cash index right now, we'll see that yes, it did. It is currently lower, of course. It's why is it not showing me anything here? It is currently lower. Once the data loads up, then I'll be able to tell you what's happening here. But yeah, 6,880, 82, something like that. So we are below this little hurdle here. Interesting. Now that's a big drop. That's a big slide. Okay, look, with the S&P, I'm a little bit more worried. But again, it could fill the gap. Certainly, it could fill the gap. Not today, but maybe tomorrow. But then we'll see if it can actually go for a higher high. Now, that's when you keep an eye on it. If it fails to go for a higher high, then I think that more sellers could join in at some point. Nasdaq, well, let's say natural gas, but Nasdaq, let me just get rid of this alert. What's with me with this natural gas? Nasdaq. Nasdaq is currently sitting around 25,230 zone. So basically a little bit above this territory. Look, I talked about Nasdaq last week, and I said that if we do drop below this 25,435, I'm going to lean towards the downside, initially aiming for this little area around the 25,223, which we actually tested already. And then if we stay above it, then maybe, push. And if we do break it, then yeah, I'll go further south. Now, look, at the moment, it is working out. This downside scenario is kind of is playing out here nicely, but I really don't want to say, I don't want to become too bearish yet, because this move to the downside could be seen as a little hiccup, because it's not like data dependent or something. It's more of a geopolitical post on Truth Social. That's what it is relating to. So just kind of be careful with with this drop right now. Maybe, like I said, maybe if the US kind of comes back with some positivity, or maybe there will be some sort of positive news coming out from between EU and US. maybe if the U.S. backs off a little bit, then yeah, it could stabilize the stock market and we could see a push back up. But at the moment, yes, we're all living on this, in this moment of uncertainty, to be honest, like always. But certainly, yes. I mean, if we just go from the technical side, then yes, I would be leaning towards the downside on this one. But given that there's more to it, because it's a fundamental issue here for sure, this time I think that, although I love technical analysis and this is what mainly I do, but I have to admit the fact that, here it's the fundamentals that's going to drive. I mean, it's normally always the fundamentals drive, right? But we help, try to put the fundamental news into some sort of a logical picture on a chart, and that's why we use technical analysis, right? Here I would say, if you want to use technical analysis, you have to be very, very careful, because the fundamental is going to be driving this one really, really hard. Let's jump into the German index DAX. Let's see what's happening here. A nice recovery here. Look at this, trying to push back here, trying to go for that gap fill here, which is, to be honest, quite possible. And in general, look, I talked about this. I talked a lot about this, and I said to you that if we do kind of hold here near this 25,000, kind of 455, we could see a little bit of a retracement back down. Look at this, almost a push towards that 61.8, back to 61.8. Now in the Fibonacci retracement, did we do good here? Let me just double check. Yeah, 38.2, beautiful. There we go, beautiful hit. We're now retracing back up, and I think that there is a possibility of a test of that 25,134. I think it's doable. I think we could see that push back up, covering the gap here, most of the gap, and then the key moment will be, can we climb back above this little hurdle, back above that 78.6 here on the Fibonacci extension, or the 23.6 on the Fibonacci retracement, which basically coincide, with each other here. So it's around 25,130. I think it's a good target. Let's see if we can get and test that area. So, ladies and gentlemen, for now, I would say just be very careful, very cautious. There is, like I said, there is room for more upside on this one, certainly, because we're kind of filling up the gap here. So yeah, let's see if we can, travel here. Long story short, overall, if we, let's say, for example, travel here, we fill up the gap, or let's say part of the gap, and we test that 25,130 zone. At least this is what my target will be for now. If we test that area, I will then take a little bit of a careful approach, because again, if it struggles to move higher, then maybe there is more room for some more downside. Very quickly on the FTSE 100. This one's doing actually better. Look at this. It's fighting back really hard. There we go. Look at this good move here. It's fighting back hard, and well, I would say it still has a chance for a move to another all-time high. But would I say I'm getting very, very bullish here? No, because you have to face it that there's a little doji here that's formed on the daily chart. So is this going to be seen as a negative? Well, certainly according to all the textbooks, then it should be. But let's not rush into conclusion, okay? Because I think my downside scenario will come on the drop below the 10,158 zone here, and I think that this is where we could see more bears joining in. And very quickly on DXY, ladies and gentlemen. Very quickly on DXY. So, of course, people are dropping the US dollar, shifting towards the precious metals, which are flying high again. That's, surprise, surprise. But certainly, I think that there is a chance for a bit of a larger correction back down. Now, look, this hurdle needs to go. We need to mark this now. Another thing that we need to draw here is that I think that there could be a larger correction back down here towards the EMAs, the 100, the 50. We could see, a stalling moment here if we do get a hold up and we see, the bulls kind of picking up the lower price here, great, we could see a rebound and push higher. So overall with DXY, I'm actually, I'm observing the range here. I talked about this in my previous sessions. I'm observing the range, and yeah, I'm currently targeting the upper side of the range. That said, I have to say that, look, if we're looking at the prevailing trend is to the downside, and we're entering a range here. So in a way, the greater chance for this one is to break out, lower. But we have moved a lot away from the lower side of the range here. That's why I will be carefully monitoring the situation here. And honestly, if we go into fundamentals on this, look, I think that at this point the White House needs a cheaper US dollar. So there isn't in the interest of making it a strong currency yet, because again, when you're trying to increase your exports production in the country, you need to make it more attractive for everybody to produce in the country. But with a strong dollar, you can't do that. So you're trying to make your exports attractive on the global arena, and why I should do that if the dollar is on the stronger side. So go figure. So that's what I'm saying. That's why I'm not a strong believer in the dollar yet. I think that there is a little bit of a de-dollarization happening, especially other major economies which are trying to move away from the dollar as well, and which is understandable. It's not something that, and I think that this is where the interventions are happening, because look, I mean, Venezuela started accepting other currencies for their oil. That was a while ago, and there we go. We see an invasion of the U.S. Then you see another oil producer who is also kind of moving away from transacting with other countries in the U.S. dollars, and there we go. Also, there's a plan to intervene with a war in there. So you see the tendency in a way, right? And certainly the US dollar right now is not the most popular one, but also it's not helping the fact that the US is behaving the way it's behaving right now. So yeah. Anyway, so long story short, going back to the situation here with the US dollar index, from the technical side, I think that there could be a little bit of a retracement back down, but then I think there is a potential push here higher still. I still believe that it could travel back up here, but again, only if it clears the current highest point of January, which is around the 99.49 zone. Let's jump into VIX very quickly. A little bit of action here to the upside we're seeing, but yeah, but for now I'm not really getting way too comfortable with the upside, although the recent developments in the market could spark fears, and maybe we could see VIX actually pushing to the upside. Actually, let me just double check something very quickly. What's happening with the January contract? Yep, 17. Right. Okay. So we are seeing a little bit of a jump in VIX, which is understandable. It's a little bit below 18 right now. So yeah, it's still below this little hurdle, I think. Yep, below this. This is 18.10. Right. Okay. We did have a jump a little bit higher than that, but we're still below that right now. Okay, we'll see. If it clears at 18.10, I think that there is a chance for a little bit of a push higher. Let's jump into AUDUSD. So again, I'm not going to spend too much time on this because I talked about it and I said to you that, look, AUDUSD for me right now, it's just kind of somewhat on the neutral side. Maybe if I want to be very, very technical, and say that, hey, we have ourselves a descending triangle pattern, and those patterns tend to break to the downside. So, we could see a bit of a move lower here. Look, either way, we could, certainly. But we need a confirmation break below the 0.6660. If we can get that move, amazing. More more sellers here could join in. But if we're looking for some higher levels, then wait for a push to the upside here. So that's what I'm keeping an eye on at the moment from the technical side. Let's see if this is going to play out nicely. Look, AUDJPY, our risk on, risk off monitor. Look at this. We're pushing back up, at least trying to do so. Now, this is what I said that in the beginning, that maybe the Japanese yen could strengthen automatically, you know, without any intervention from the BOJ, just because, you know, the stock market could drop lower and we could see the yen picking up, you know, buying interest. Look, long story short, either way, at the moment, we're watching this very carefully. We dropped below the 106 territory. And if we do stay below that, then there is a chance for a drift lower. At the moment, like I said, we're also flirting with that 20-day SMA within my Bollinger Bands. It previously acted as a good area of support, but if we somehow clear it, if we somehow drop and stay below it, then yes, I will consider some moves to the downside. If I'm looking at some higher levels, I think what I'm going to do is I'm going to wait for a clearance of this downside line, and if that happens, great, more buyers could join in. Another interesting pair that I wanted to show you, basically I'm always searching for a good technical setup, and that's AUDCAD. Look at this. After we had a nice range here, I mean, overall we're still trading higher, right? Okay, that's a fact. Overall, we're still in an uptrend. We had a range here for quite a prolonged one, and we pushed to the upside. We broke through the higher side. Great. Now what's next? Next, I'm still somewhat positive on this one because, again, first of all, I'm not very positive on oil. That means Canadian dollar to the downside. And AUD certainly is the risk currency, and you know, it's whenever the market is feeling okay, we see AUD kind of, you know, pushing higher. But in this case, I think that the weakness of the Canadian dollar could be the factor here. Also, technically, look at this. It's a beautiful bullish flag formation. If that's the case, well, there we go. I think that this is what could, in a way, happen, and I think that this is what we need to kind of currently inspect. So it's something like this, basically. Something like, even actually it's more of like a parallel, you know, it's like a channel here that we're stuck in. So if we do clear the upper side of it, great. I will go to the upside. Very straightforward here. If I'm looking for some lower levels on this one, well, at least a drop back below the 0.9242 territory would be nice. And then we'll just kind of take it from there. Then we'll jump into EURUSD. Ladies and gentlemen, we're seeing a little bit of a push higher. Yes, the DXY is not feeling the love, and hence why we're seeing a euro here strengthening a little bit. Now, you would have to say that, you know, this current escalation between the US and EU should not be good for the EU. However, it seems, at least, that the U.S. actually could be losing out a little bit more in this one than the Eurozone. So maybe that's where, you know, and that's why we're seeing the weakness in the U.S. dollar, and maybe the strength here on the EURUSD is just kind of automatic, you know. It's not because the euro is on the stronger side. No, it's just the weaker dollar that is driving EURUSD back up here. Either way, I would say this way: if you're looking for some lower levels, then wait for a break of this upside line taken from the lowest point of August. If we clear that one, great, wonderful. More sellers could join in. For the upside, I would prefer to wait for a push above the downside line here. I do like this downside line taken from the high of the 24th of December, and if we do clear it, I think more buyers could join in. EUROJPY, very quickly, again, we had a nice drop here, testing the 182.64, but we're rebounding now and pushing to the upside. Look, I will say this way: if we were looking for some higher levels, at least wait for a push above the 184.92. That's the high, or should I say the highest point of December. If we clear that, then we'll aim for the highest point of January, which is right here. Also the highest point of last week. So, and that's roughly around 185.57. If that gets clear, the forthcoming higher high will be confirmed. Very quickly on some other pairs. Now, Euro NZD, I haven't looked at this one for quite a while now, ladies and gentlemen. Look at this. A while ago when I saw it, we were trading above a few upside lines, and this is what I was said. Like keep your eyes on this upside line, then keep your eyes on another upside line, which we already violated. There we go. But I actually, you know what? Whenever we get something like this, it's very close, so I'm being very careful. Now, if you're looking for some lower levels, which could happen actually. The psychological 2 level, I think that this is something that we need to keep in mind. If we do drop below the psychological 2 level, I think that yes, more sellers here could join in. If you're looking for some higher areas, well, for now, I will do what I'm going to do here is this basically. I'm going to wait for a break of this downside line, and if we can get that move, amazing. More buyers could join in. So long story short, ladies and gentlemen, 2.0678 or 79 zone here is the current highest point of actually not the current highest point, the highest point of 2025. So that could be the next target. But again, for that, I need to see a break of this downside line. Very quickly on Euro GBP, I don't like this pair, but I still look at it, and it's currently kind of in a little sideways action moment, forming possible bearish flag. Either way, a confirmation break below the 0.8645 here would be needed. If we can get a drop below that, a forthcoming lower low will be confirmed. Let's jump into GBP, and because again, this is quite important right now. Also seeing a little bit of a push back up, certainly on the weakness of the US dollar. And look, for now, it is a bearish, kind of move here overall. We're seeing this slide since the beginning of January. We're seeing this decline, but actually, this little decline could be part of. Let me just draw you on the chart here. Could be maybe seen as a falling wedge. Now, if this is a falling wedge, then according to all the TA rules, such patterns tend to break to the upside. I talked about this before, and I said that if we do drop below the 1.34 territory, I'll lean towards the downside. I did lean to the downside, and it was working, but I have to admit that, geopolitics have skewed things a little bit, so I will say that at this point, if we stay below the 1.34, I'm going to slowly aim lower. But if we start pushing back above it, above the 1.34, then my question is, what's going to happen here with this upper side of the falling wedge? If we can get a clearance of that, then yes, it's opening the door to some higher areas. GBPJPY, looking good here. We had a rebound here. We had a push back up. Look, at this point, I would say this way, that if we do break this upside line, which I just adjusted actually, because I think this makes a little bit more sense. This one is taken from the low of the 24th of December. If we do fall below that, then great, I will go lower. But at the moment, we're pushing back up here, so maybe the upside scenario is not off the table. Let's jump into USDCAD very quickly, because I'm running out of time here. I'm spending too much time on this, but hey, it's quite important because there's a lot to talk about as always. USDCAD, okay, looking good here. This is the barrier, the 1.3919. That's still, I'm watching that one. We're seeing a little bit of strength here in the Canadian dollar, or actually, you know what, not strength in the Canadian dollar, just weakness of the US dollar, and yep, there we go. But oil, oil is still on the kind of, oil is drifting lower, so Canadian dollar is not really the best, the top gainer right now. Nevertheless, with the USD CAD, I need a pop above the 1.3919 in order to go higher. For the downside, a drop below the 1.3854 zone-ish, which is around 23.6 on the Fibonacci retracement. That's what I need to see a drop off before going a little bit lower. USDJPY, similar, so beautiful rebound from this upside line, fantastic. So now, actually, we're staying above the 158 zone. That's great. So let's see if we can push back up, actually. So let's see if the stock market can recover. Maybe we could see some, some nice action to the upside. Let's see. Again, today, like I said, I think that nothing major will happen. I think tomorrow they will try to do some damage control. So, or maybe they will try to do some damage control today, so that the stock market could recover somewhat tomorrow. USDCHF, beautiful decline, testing this upside line, taken from the low of the 26th of December. Let's see if it breaks. If it breaks and we fall below the 50-day EMA here, shown as the green line, then yeah, I'm going to lean towards the downside. Very quickly on to metals, ladies and gentlemen. Gold exploding to the upside. Look, at the end of last week, we saw the precious metal drifting lower. Gold here, was flirting with this upside line, the steep upside line taken from the low of the 31st of December. At one point, we even dropped below the 4,550 area, and there we go. Look at this, boom! Beautiful reversal today, just because of, like I said, the talks between all these talks and Truth Social. That's what's driving, the fear, and everybody's jumping into something a little bit safer, which is gold right now and silver. Silver had a moment, created a new all-time high today, but there we go. Beautiful, beautiful push higher here, and now a little bit of a retracement. Look, the day is young, and so are we. Yeah, I wish. We are, yes, we still could see some action to the upside here. Don't exclude the upside scenario. If we do pop up of the 93.69 zone, then yeah, of course, I'm going to go to the upside. Platinum, very quickly on platinum. This one's stuck. Had this little move to the upside, but currently I would say it's just coiling up, right? I mean, we can see that it's not really doing much. It's just getting into a bit of a squeeze, so we're watching this very carefully. Don't want to say anything yet, but yeah, it looks, I would say, more positive than negative, because the prevailing trend is to the upside before we get into this triangle pattern. So the greater chance for this one should be to break out higher. That said, I need a confirmation break first. If I can get that confirmation break, then yeah, I'll do something about it. Palladium is drifting a little bit back down after still getting a hold up near that 38.2 on the Fibonacci retracement, which I have drawn here, and this is on the monthly chart. Looks good here. This is drawn from the highest point of 2022 to the lowest point of 2024. 38.2, we did that, so we're currently struggling to kind of push above it. Copper on the monthly chart still trying to make its way higher, but currently is getting into a bit of a squeeze as well. Now look, very quickly on sugar, rebounding back up. Beautiful move here. So I would say, look, with sugar, it's 14.39. It's the barrier that I'm watching. If we do drop below it, I'm gonna go lower. But it seems like we're trying to get out of the squeeze. Let's see if we can push through this downside line, and if we can actually go back to that 15.34 zone. Very quickly on oil, a roller coaster ride, of course, where it's still keeping an eye on the developments with Iran, the U.S. and Iran. It kind of went quiet a little bit. I think there's a variation so that the Europeans wouldn't be left out, right, from all the U.S. attacks. They're now focusing on Greenland. So maybe next week we're going to go in, or next week, this upcoming weekend, we're going to go more back to the stories around Iran. So that, like I said, so that nobody would be left out. Honestly. And for now, I think oil is also on standby. It's drifting back down because we do understand that there is a lot of supply, lower demand. But these, these stories, these conflict stories from Venezuela, from Iran, surrounding U.S. invasions, then yes, those are not kind of, giving the bears some breathing space. The bulls keep on coming back. Anyway, let's see how this is going to play out, ladies and gentlemen. Okay, ladies and gentlemen, natural gas. This is something when I was confusing natural gas with NASDAQ, but this morning. But yeah, natural gas. Look at this beautiful jump back up. Honestly, it looks a little bit more positive to me than negative. But look, as long as we stay above this this upside line drawn from the low of the 25th of August, if we continue to trade above that, then yes, I'm going to go to the upside. Bitcoin, right? Okay, beautiful decline. We experienced, we saw A drop back below the 94.58. Look, I talked about this last week. I said if we do drop back below this 94,588 zone, I'm going to lean towards the downside. And actually, you know what? I'm going to stick to that. I'm going to stick to that, and I think that there is a chance of maybe a test of this upside line, or this area closer to this upside line, which is drawn from the low of the 18th of December. If we somehow ignore all that and just push back above the 94,000 kind of 600, then yeah, I'm gonna consider a move maybe towards the 100,000 zone now. Bitcoin Cash, now I do like this one, and look at this, how technical it is. Boom, look at this holding. Yes, we pierced through this upside line, but we still remain above it. So look, as long as we stay above it, I think I'm going to stick to the upside. I like this one. I like Bitcoin Cash. I said it. I kind of showed my love to this one many times already online here. But yeah, I mean, look at this. I mean, this is just spectacular. This is holding nicely above this upside line. Let's see if we can stay above it. Ripple. We dropped below 2, and look at this spike here. Look at this drop here. Boom, we even dropped at one point. We dropped below the 1.1990. There we go. This is the area that I talked a lot about. And I'll say it this way. As long as we stay above this 1.1990, I think there is still potential for an upside. Ethereum. Now this one's a little bit on the modest side in terms of the drop. And yeah, it's for now it's the interesting moment here. If we do remain above this upside line, then great, more buyers here could join in. For the downside, a break of this upside line, yes, would be nice, and we could see a little bit of a move lower. Hey, well, let's see. Litecoin, $70 are still holding. We did drop briefly below the $70 mark, but let's see if we can hold and stay above this the low of the 15th of January, which is around 69.65 area. If we do stay above it, then yeah, something like this I'm going to consider. But if we drop and we stay below the 69.65, I think further declines are possible. Dogecoin, very quickly, beautiful decline as well. Let's see if we can rebound back up here. And Polkadot. Now Polkadot is below 2. Okay, Polkadot is below 2 briefly right now, but maybe it will have enough steam to go back up. Let's see if this is going to happen. If we somehow travel back above 2.04, well, this is going to be an interesting moment here on Polkadot. Tron. Tron is declining. It's just fine. I mean, this one is still overall traveling higher, but with these little corrections back down. I like Tron. It behaves like a currency. So hey, I think that for now, yes, I'm going to consider a larger correction back down. But as long as we stay above this upside line, taken from the low of the 31st of December, then yeah, I'm going to stick to the upside. And that's kind of it, ladies and gentlemen. I just wanted to have a quick glance at the Ethereum Classic. Beautiful move here. I like this one as well. Beautiful test of this 11.31. So look. Look, I'll say it this way: as long as we stay above this hurdle, then there is a chance of a move higher. But if we clear it, if we clear this 11.31, then yeah, there is a potential idea here for the downside. Ladies and gentlemen, that is a wrap. I'll have to wrap it up here. Thank you very much for watching, listening. I really appreciate your time, your views, your likes, your comments, everything. Yes, so hopefully you have enjoyed this session. Thank you very much for watching, listening. I really appreciate your time. As always, stay safe, have your stop losses in place, risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you when? That's right, on Wednesday. Thank you very much, and bye-bye.